Ladies and gentlemen of the crypto space, we're live on a Monday, October 28th at 11:46 a.m. It's this week. I believe this is the last full week prior to the election. Five, I don't know. I can't count days. Looking at a calendar. Someone look at a calendar and validate that statement. But in any case, it's either this week or next week, and that means we're getting close to significant timing. I believe on the 7th, the Fed makes a decision regarding the next rate cuts. Then they sure as hell have lost control of the long end of the curve. Mortgage rates are up. Auto loans are up. Loans are up. They're costing more money. It's not like the cuts had an effect that anyone wanted them to or expected them to. Anyway, so the title of the stream is Bitcoin demonetization. And I want to circle back around because I've mentioned a couple times over the last months, maybe a year and a half, my proclivity for Bitcoin over other collateral instruments, and I want to reinforce that because that is the case. Bitcoin is what counts. Bitcoin is your money. It's your storage. The whole Bitcoin maximalist narrative of Bitcoin demonetizing everything, I think, is quite reasonable. So why do we allocate capital to? I don't even want to call them altcoins, fintech, to businesses that deal with credit and lending and foreign exchange, so on and so forth. Okay, the means to an end. Now, a robust portfolio or well-rounded capital management has both. You gotta have money. What's the point of not having money? So, but if you have money and you don't have cash flow, you don't have a well-structured operation. So you need both. You need capital, you need cash, and hopefully it's collateralizable because that means you could access equity and you could make it turn it into working capital, so on and so forth. But you also need business. It's the whole point of financial management is to not just have money. You want to do something, put it to work. So that's what we primarily discuss. Now, what do you do with your business? Your businesses generate cash flow, and your cash flow, then it's the question of what's the denomination. And I would think um, that is where Michael Saylor's type of conversation comes in, and I think that's quite reasonable for balance sheet composition, putting Bitcoin on the balance sheet, but clearly you need currency units as well, sovereign currency units, because you need to facilitate settlement, administrative obligations, for instance. And the prevailing settlement currency is not Bitcoin, it's dollars. So you need to structure your balance sheet to be respective of the need to settle transactions and to retain value and be forward looking, so on and so forth. It's everything Michael Saylor talks about. So you've come to this channel to think about investments in fintech, which I think are great, but that's not your value storage. Now, they may or may not outperform the appreciation of Bitcoin, but that's irrelevant. What's pertinent is a healthy, well structured business, quote unquote, a portfolio that has cash, capital, collateral, variety of terminologies could be thrown around in the cash to describe the components of the cash portfolio. And then your investments in fintech that produce cash flow. They are your businesses, so to speak. So your business owns businesses, but also cash. So there's a lot of terminologies, but the whole point is hopefully the way I'm describing this tells a bit of a story of how to break shit down, break what you do down into these fundamental components. So here's a good example, in my opinion. Let's say you had X amount of Bitcoin back in 17, less Bitcoin in 20, started figuring things out, and you had no cash flow back in 20. Maybe you were working, um, but you wanted to stop working. So you want to invest, you want to own a pizza shop. And it turns out all of these crypto fintech businesses started to come online. These are great businesses for the reasons we've discussed. They're deterministic, they're disintermediating of cash flow. Um, they're distributed to a great extent as compared to businesses in the real world. These are autonomous financial businesses. So these are great businesses to own rather. I mean, clearly we could be talking all of these streams about pizza shops down the block and actual physical brick and mortar pizza shops. But that's not really, I don't think that's innovative. And I don't find that too interesting to own real world businesses. I find these businesses much more interesting. But aside from that, you would have less Bitcoin now than you did in 17 and less Bitcoin than you would have had in 20 at in exchange for a significant education in capital management. And to a degree, maybe that's a tuition. And I'm not too fond of saying that, oh, you should have just owned Bitcoin in 17 and then in 20, and then you just own Bitcoin. But then you know nothing about how the world works. Then you know nothing about capital management. You know nothing about investing, venture capital, entrepreneurship. You've learned nothing. You just own Bitcoin. And in theory, I guess that is a way of life. That is a way to execute. That's fucking boring as shit. I mean, I guess you could. That's a path. I don't find that too much of an interesting path. I want to lead an interesting life and I want to own these particular types of businesses that people have been creating, not what we're displaying on the screen, but things that have been depreciating relative to Bitcoin, significantly depreciating relative to Bitcoin. It's because most people don't understand them. And those are the things that I want to own from a cash that are part of that cash flow component of the portfolio. I find it exciting. And I know that most don't understand it. I know that Bitcoin maximalists don't understand it, and that's okay. But it is an important component of my character. It is an important component of what I see as an integral part of navigating life. Why do I say that? Because you navigate life better when you understand the world in which you exist. You understand the system. So because I've learned how the system works, I was able to see these businesses, these fintech businesses being built in the crypto space and how they are analogous to traditional fintech businesses. And I saw that as innovative. And that's exciting because that is a minority perspective to have. And if that costs me from a total net worth perspective, then that is okay. That is a part of tuition because you cannot, money does not bring happiness. You need to be well rounded. You need to be informed. You need to have a capacity to understand the world in which you exist. That is what brings happiness. That is what brings calm. That is what reduces anxiety. So just having a bunch of Bitcoin stuck under your pillow, metaphorically, uh, I think does not solve some of the most important things that people need to solve for uh, as part of the human video game. I guess that's a decent way to say it. Anyway, so Bitcoin dominance is like crushing it. And I think we can see weird things. I think we can see a higher high, and that is consistent with the structure of the system, how it's changed with the ETFs, recognition of what's going to play out with regard to sovereign debt globally, not just the U.S. What has to happen with the dollar? Bitcoin could easily outperform everything, cyclically, of course, along a secular trend. So we can potentially see higher highs, which should be pretty wild from a Bitcoin dominance perspective. 74% would clock in a higher high. Now, that doesn't mean you don't get significant outperformance of Bitcoin denominated in crypto markets. It means you need a much more significant narrative to outperform Bitcoin. It's not necessarily the silly things. For instance, this indicates right here Bitcoin dominance that the meme coins are relatively meaningless. And but look at the outperformance. If you're getting a 10,000% return, 100,000% return on some of the meme coins on Solana, it's very isolated, but it doesn't mean anything structural. Doesn't mean anything holistic about the crypto space. That's literally what this chart encompasses. That that all of that outperformance means nothing about the structure of the system. So what does that mean? You play your meme coins and you sell, you dump that shit on the next schmuck that is willing to buy it from you at a higher price, and you buy Bitcoin with it. And that's cool. If that's a game you like to play, that's cool. So just don't forget the game I would say is cash position. If you have been investing the last couple years in crypto markets, especially from 22 on, where things started to fall apart, your next part of the equation is probably to recapitalize cash, in my opinion. And then this is what I firmly believe heading into the next cycle, which hasn't started yet. And it's very Warren Buffett-esque. So we spent what the last 3 years investing based on investments in 20 and 21 because we had cash flow because we bought things back then. 22, 23, and 24, we used all that cash flow that we acquired from the earlier years to now own more things, and now uh, we have to not rehabilitate, but reinvigorate the cash component. So we need that optionality, those choices. So I'll spend the next cycle recapitalizing the cash position. Probably will be predominantly Bitcoin and dollars denominated, which would be stable coins, and pick your stable coin of choice. And I'll be adding to Bitcoin as well strategically. I did to a degree. I'm not aggressive with it right now, but I'm looking forward to probably putting dollars to work, maybe a little bit more than adding to Bitcoin. Because my expectation from Bitcoin from here is maybe 300%. Maybe you get 150, 180, and that's probably about half the move, the total move for the overall Bitcoin part of the cycle. So we were down to 15 at the lows for the cycle. So if you go from 15 to 150, that's a 10x on the Bitcoin cycle, which actually makes quite a lot of sense. You guys realize that, right? Folks, Bitcoin literally ripped from 15 chip. That's the bottom of the cycle. Top of the cycle, 150 is 10x for the whole cycle. You're a good part through the entire Bitcoin cycle. So there's no discounts on Bitcoin, and I tell you that all the time from like even as short term as a weekly perspective. 200 is down at third, is down at 40. You're at a premium even on the weekly. Then you go to monthly, and you're at a premium compared to 22,000, the 100 SMA on the monthly. Bitcoin's at a premium. You're not buying it at a discount. So I lean towards stacking dollars in this instance, just because I don't want to chase, and I don't need to chase, and that's all good. Y'all have to make your decisions in that regard. So I will be accumulating Bitcoin. I will be accumulating dollar currency units, skewed towards dollar currency units, with an expectation of about 150, 160, 180, or whatever the hell it lands this cycle. Mean regression, and as in the next cycle, I will perform better from a cash position management perspective, rotating currency units into Bitcoin denomination. And then we're still early to start thinking about acquisition of investments in a 26, 27 type of perspective when one would speculate things are falling apart from a global economic perspective. That's overall my sentiment on the next 3 years, 3 years. And that's pretty much high level, broad strokes of the game plan. 68,434 in a Bitcoin. I mean, this is such a perspective I give you when I look at the monthly. This is all dating back to like 18. Most folks on social media are zooming in like literally here. They're giving you like, I don't know what, hourly candles. I can't do shit like that. That's crazy. All right, fine. No, I'll give you daily candles. That's all I'm doing. Let's go here. So this is very promising from a week and a half out from the election. It was 8 days now, not even one day more than a week, and almost at a higher low. You break a higher low. This is not. This is a bit of a meaningful level. Let's draw the line. Horizontal lines, and here's your levels of where things will get interesting. Draw a couple of them. There's our cyclical short-term levels to breach. Start to get the cascade. Like for instance, you breach this 69, you probably go to 72. Pretty much air between there, and then you start to get some levels of resistance as people try and sell into the bid, expecting a rejection from a meaningful level. And that could be the case, unless it just blasts right through it all. And that's why I'm not fond of trading, and I rather just own because the blasts, they're great. I have. And some people manage that from a trading perspective and also their spot bags, as they call it. Other things I'd rather do with my time. Ethereum still sucks, but from a dollar perspective, it's quite remarkable. So what does that mean? That means it's gonna underperform Bitcoin, but it's gonna outperform dollars. All right. Does that make obvious sense? Is that clear? So that means it's significant currency unit or collateral instrument. It means it looks strong and great from a value perspective, dollar denominated, and it will underperform Bitcoin. And it has been underperforming Bitcoin. And I think that probably will continue because of, and again, Ethereum has the ETFs also. But sentiment from a TradFi perspective really indicates that there is a different appreciation for Bitcoin as compared to Ethereum from the ETFs and the traditional institutional or companies that are potentially listening to like Michael Saylor talking points on how to compose the balance sheet. So that's something to consider. You know, there's no certainty on how things play out, but uh, I would probably be leaning at this point towards Bitcoin outperforming, which is contrary to the most previous two cycles since really Ethereum came online. So I'm very curious where we end Bitcoin dominance at the end of 25. Where do we end Bitcoin dominance at the end of 25? And we potentially be heading towards a higher high. That'd be quite interesting. I mean, look, we literally just put in a higher low, just put in a higher low compared to 17, December and 17, January and 18 or whatever, Q4, Q1, 17, 18. Very interesting. Not there yet, ladies and gentlemen. Japan back above trend from a monthly perspective. The last 2 months have been wild. Wow, 10 years up 1%. I didn't think it was going to blast through that time weighted average price. That's crazy. That is not an expression of rejection. That is an expression of resistance failing. And now we're 3 days out. Okay, 3 days out from the close on the monthly, and yields on the 10-year just punched the monthly time weighted average yield to be most correct. Um, that is quite interesting. That is some serious volatility. 1%. They don't have control over the debt. So this and that is expressed clearly in the move indicator. That is this monthly move candle is absolutely monumental. This thing is, what's the odds of that wicking down? Yeah, 3 days left. What's the odds of that wicking down? That is a breakout. That is a higher high. That is invalidation of the downtrend. I mean, it literally looks like 10 years on like a 6-month chart. I mean, look at that. It's like downtrend, breakout. I mean, we did smack into the 200, so maybe we bounce back to 474, close to 5. That's just gonna that volatility though is gonna tear everything apart. That's some serious volatility back up to 128. We start seeing the 130s, 40s, and 50s again. It's gonna be very interesting to see how the market reacts to those kinds of numbers. Anywho, Bitcoin, Ethereum dollar denominator looks good. Bitcoin dollar denominator looks good. Ethereum Bitcoin denominator looks like shit. Bitcoin dominance is absolutely wild. So we got a lot of some of those strange reality type of setups that's telling us things are they rhyme and they're different this time, and how are they going to be different? And that's what's intriguing. That's what's always intriguing. Like, where does Bitcoin dominance end? And I think it ends higher, and that's going to frustrate the crap out of a lot of people. But it's not going to frustrate me because it's important to have exposure to Bitcoin from a money perspective, your cash position, as I will continue to reinforce to you folks. Cash investments, cash investments. And whether you're talking about like a Saylor with MicroStrategy, he has his balance sheet. There's cash. There's plenty of cash flow. That cash flow isn't Bitcoin denominated. That cash flow is dollars because there's a business. Okay. Do you see how I'm literally talking about the same type of structure, just wanting to not have brick and mortar? I mean, he's got lots of employees, they got software products, they got vendors and contracts and all of that, robustness to an actual functioning business. I just want that business to be deterministic and immutable, preferably, and the cash flow to be disintermediated with no humans, no real estate, so on and so forth. So that's the only difference between uh, a Bitcoin maximalist perspective on how to manage, um, uh, or not really a Bitcoin maximalist perspective, is how to manage from a business management perspective, the balance sheet, cash, and cash flow producing or business products and services. Maybe that's a decent way to say it. I hope that's clear. I hope that makes sense on how I think about these things. We'll go through some comments. Tether USDC $120.235 billion. Let's go through comments and pull up DeFi Llama as we talk about stuff. I want to look at stablecoin metrics. That 69. Tether is dominant, remains. Tether's dominant mainnet. Okay, we'll glance over here as we go through the few comments. If you're on X or you are on YouTube, please feel welcome to ask anything on your mind. Happy to help the best I can. Arrows in the house. Good morning. Sir Joe present. Adam. Hey, Noah. What do you think the strongest argument to present someone who thinks the BRICS thing is what's hot? There's no investment. Doesn't see dollar businesses the same way we do. Well, there's nothing to invest in. So the question is, how do you want to make money? Well, all right, maybe they're like, all right, the dollar is going to get destroyed and BRICS is going to be money. All right. So it's not about making money. It's like, how are you going to get food? So you need to acquire whatever they're charging at the grocery store, supermarket, whatever the terminology is in the respective country. So if they're charging a particular currency, you need that currency to get food. So how do you acquire that currency? That's it. So it doesn't give a shit whether BRICS becomes a very powerful currency or not. In the U.S., you're still going to need dollars, and the value of the dollar may change over time, will change over time. I need dollars in the U.S. to buy food from the market. So where that's heading uh, doesn't mean anything from a BRICS perspective. What matters is how do you acquire your natural resources, your consumer staples, and how do you pay your rent? What denomination is it in? If you're in England and you need pounds to pay your rent, Do you think the person trying to pay rent gives a fuck about what's going on with BRICS currency? No, he needs pounds to pay his rent. How do you get the pounds? You're not investing in BRICS currency, so what does that even mean? So, okay, so who's issuing credit against BRICS currency? Great. Now that's an interesting potential investment. That would be part of our conversation. Who's issuing those currency units? Who's issuing credit against those types of currency units? Stuff like that. And maybe there's a business that we can gain exposure to, so we could get interest denominated in BRICS currency units. I mean, it's the same conversation as any other currency around the world. You want exposure to yuan, yen? Pick a denomination. Do you want interest in on your collateral yen denominated? All right, so BRICS denominated. So that's the type of conversation to have with them. It's people get caught up over the silly stuff, over stuff that doesn't really mean anything. They got caught up on social media stories and hype, and I mean, I appreciate the question. It's a perfect question, but look at the question. It doesn't mean anything. Who thinks the bricks thing is what's hot? What's hot about it in regard to structuring a business and making money to buy food at the supermarket? You know? So what you gotta realize is when you're hearing that kind of argument of a friend or a colleague, they don't have an argument and they're just regurgitating a popular social media talking point. Okay. Um, so replace that last sentence: dollar business, pound businesses, yen businesses, yuan businesses. Is there Bitcoin businesses? I mean, there's Ethereum businesses. Ethereum pays itself. You get 4 or 5% or whatever the prevailing rate is on Rocket Pool or whatever. So, but but those are the types of counter conversational points. But the complexity there is those counterpoints may fall on deaf ears. It's kind of hard to have these types of conversations. The most important person to have these conversations with is yourself, so that you understand these things. And then, if and only if you can help someone else and they're willing to digest this kind of information, is it even worthwhile to have this type of conversation with other people? Otherwise, this type of talk falling on deaf ears is just a waste of breath and will end up just frustrating the shit out of you. Your kind of on point, refriend, repeating talking points. It's just talking points. It's talking points. The bricks narrative. I would just that your friend may be the type of person that gets angry at Brent Johnson. Brent Johnson's always like the dollar. The dollar ends at 300, and everyone's like, "Oh, the dollar is gonna fall. The dollar is gonna fall." But I don't see the dollar falling. I see the dollar actually at 104, just showing remarkable strength. I mean, from a structural perspective, compared to 2008, the dollar has increased in value, price range, relatively 47%. Oh my God. I mean, just that's an insane number. What was the other points that I pulled up on social media? Uh, Here. The dollar is 49% of global payments, the highest level in 12 years, being used more than it has been in 12 years. So that is a significant structural. In fact, that's a trend breach, as you could see. You had some horizontal chop, and then a high, higher high than here in 15, then here in late 2019, early 2020, and then it's up back into 2012 levels where we had a spike, which was the Asia currency crisis. Oh, that's interesting. Why did it spike? There's other currencies. It's not about dollar strength. It's about foreign currency weakness, about foreign currencies collapsing. And that's kind of what the hell is going on in China and frankly, Japan for that matter. Their currencies are so messed up that we've printed how many dollars and our dollar still goes up in value. How messed up is that? But that's real. I wrote in Japanese. All right, let's go. Basically, I wanted to translate, let's fucking go. And that's the translation. I don't, the languages don't translate our colloquialisms. But it's a complete reversal back to the upside. So the Fed's rate cuts did literally nothing. And that's what like Glenn Alden was talking about, where the rate cuts, they lost it. They have no authority, no power anymore to affect the market, the long end. And the only way they're going to be able to affect it is with someone buying it, whether it's the central bank, and I don't want to throw around the term, but all right, that's called quantitative easing, quote unquote, is where the Fed places a bid in 10 to 30 years, or Basel III endgame, and they force the banks to buy it. Someone's got to buy it and to get these yields down. The Fed policy rate isn't doing it. So that's some serious shit. If you're on X or you're on YouTube, feel welcome to ask any questions. Otherwise, I'll keep rambling to the best of my abilities for a couple more minutes. But I'd rather help you guys out if you have anything specific on your minds. Let's go over to volumes. You guys probably want to see volumes. So some good volume spike, 6.43% across the crypto space. Now that probably does include things like Tron. So let's get a little bit more granular. Marginally positive some, 857 mil 24-hour vol on Ethereum, 260 Arbitrum basis. Wasn't that almost a bill? 738, 12% week over week. It's big numbers. Minus 10%. There you go. That's why everything on Arbitrum has been suffering. And base, that's just remarkable Coinbase activity. I don't even call it base. This is Coinbase chain. And the arbitrage that Coinbase does to balance its books and manage everything that it does from a business perspective um, is creating a huge amount of opportunity from a Coinbase chain perspective. And that may be the case with what Kraken wants to roll out with optimism, and that is why I am quite fond of the exposure that we have chosen to have across the Optimism Superchain network. That doesn't really diminish my sentiment regarding Arbitrum. Arbitrum orbits, there's about 50 of them, and I think Arbitrum, along with Optimism, will lead Ethereum to wherever the hell it's heading. And that's pretty damn interesting. Interesting that rootstock is displayed here. So why is it displayed here with zero volume? That's unfortunate. That's very unfortunate. This is literally a Bitcoin EVM, by the way. There's only two real Bitcoin EVMs, and it was Rootstock, and the historic one was uh, Syscoin with Rolux. I don't even think that's displayed here. They do display it. A whopping $31,000 worth of volume on a Bitcoin EVM network. Uh, a little Pegasus. It's just like a Uniswap V2 fork, pretty much. V2. Who's ringing? Nope. Um, enter the Brainatorium. Appreciate your perspective, Noah. Do you have any um, unicorn chain or UWU? Do you think there's a use case other than number go up for tokenized emojis? Not really. That does sound cute, but expect everything to demonetize into stronger money. So value flows from weaker money to stronger money over time, especially when you get significant outperformance. Do you think someone that gets um, uh, you know, 100,000% on Skibbity or whatever, Popcat, they're not going to rotate capital to Ethereum or Bitcoin, and probably more to Bitcoin, considering what the numbers are telling us. So whatever it is, it's hot potato. To get in, you get out, you get 1,000%, you get a 10x on the money. A few folks are lucky enough. Um, so that is the most important thing to understand after being through so many of these damn cycles is you got to take your money out. And the question becomes, what do you take it out in? And what do you do with it when it's out? And what is out even mean? So that's what we discuss so much about capital management. It's like out Bitcoin denominated, great. So that means how do you put it to work? What do you do with the equity? Um, and cash. We know what to do with cash. You don't necessarily have to invest it. You plenty of places throwing around 10, 20% on cash nowadays, which is significantly outperforming risk-free rate. So you're exposed to crypto stuff, taking on a little bit of additional risk for two, three times the rate of return in TradFi on dollars. And plus, you get added perks to having stable coins as compared to dollar deposits and bank accounts. So the point is, whatever you are thinking with regard to, don't think of them as investments. Think of them as transitory means of extracting capital from other people. And that's okay. I very much did things like that in 2020. I certainly did things like that in 16, 17, and even earlier years, but not something that I fancy nowadays. Captain, no questions today, but appreciate your viewpoint. You're very welcome, John. Always a pleasure. Always a pleasure. Adam, wouldn't you expect Ethereum to outperform Bitcoin near end of cycle, especially as it's likely the only other spot crypto ETF for some years? So the ETF's not indicating. So what substantiate it? You can't just say back in 2020, Ethereum outperformed as substantiation. So you don't want history for substantiation. You also need narrative. You need confluence substantiating Ethereum outperformance. So right now we have a failure. That is a structural breakdown in trend. And that's from a logarithmic perspective, but you can see it's also from just not logarithmic. That's a significant breakdown, no matter how, pretty much how you draw it. Doesn't matter how you draw it. So that's meaningful. That could mean be transitory depreciation relative to Bitcoin, because you don't have to have Ethereum outperform Bitcoin for Ethereum to remain significant. And the notion of smart contracts remains significant and to do very well. You don't have to own things that do you make the most money. You have to own things that make the most sense. You have to own things that are the most rational to have a well constructed portfolio that serves multiple purposes, that serves your cash management and serves your investment purposes because you don't want to spend your cash. You need a place to be able to make cash so that you can go to the damn supermarket. So that is something to be very considerate of when you structure what you own. Uh, but I'd probably be skewing towards Bitcoin versus Ethereum. Uh, it doesn't mean you can't put Ethereum to work. That's what I want to do with things like AWA. I want to get some of these damn points. I got some Ethereum unlocking on Thursday, and I'll be able to throw it in these LPs. Well, it's not LP. These are incentivized with their phantom deposits, which facilitate their cross-chain transactions. They had a lot of deposits. Didn't they get to 10 mil? Really? Anyway, there you go. Didn't they just announce that? I like this post. Seamless cross-chain. That's a post I did in 2021, by the way. Seamless cross-chain. Didn't they just post they had like 10 mil in deposits? 8 mil. I think they're up to 10 mil. That's a lot. So I'm very impressed by this product. It's and what's most interesting about this product is it literally uses Curves LPs. So plays into uh, volume and fees and revenue that we will ultimately uh, have exposure to because we own Curve. So this is a very interesting product. Um, I should have been getting points earlier. Very unfortunate that I didn't do that. But I'm never early to things. I barely have any points left, 7.99. But then again, this probably I don't even know the length of the list. All right, so not that bad. No, that's total transactions. I don't even know what the list is, but 7.99. Hopefully, I'm not at the bottom of the list. Anyway, I like the DeFi money as well, so I like these points too. These points have just been coming in like wildfire. And this is also indirect exposure to curve. So I like these additive ancillary protocols that are related to core investments and additive ancillary. They're related, but supportive of. So as an extension of CRVUSD, the synergy with CRVUSD and money could prove very interesting. How two protocols with very similar peg management systems could interact with one another to create, a synergistic stability. Could be very interesting. A lot of points, 628. But big bonus points for having V curve exposure. So I definitely found that one interesting when I finally saw DeFi money for what it is. Anywho, if you have any questions, more than happy to answer. A little quiet on the commentary today. Let's go back to volume for a sec and see if there's anything else that's interesting. Optimism. Velodrome significantly outperforming Ethereum. So, from an optimism perspective, I'm quite fond of the velodrome exposure. So, how could you say if Bitcoin's outperforming everything and the dominance is up, why would you not want to own something that is dominating in this particular market? And that's like not owning investments in the country where you live. If you live in India, if you're not owning investments in your own country or pick your respective country. So, this is the country, the market that I want to have exposure to. And even though Bitcoin is outperforming, that's a great investment. It's fulfilling to own something and participate in something that has such a significance to this market, even though it's not outperforming Bitcoin. So that's okay. That's the biggest thing to be a contrarian. You have to realize it's not the most important thing to make as much money as possible. It's the most important thing to be reasonable, to have low anxiety, to be diversified to a degree, to have something well structured. Okay? Be rational. Adam, quiet tonight, so I'm abusing the questions. Never abusing. Everyone else is under abusing the questions. I'm going to cut the stream short after Adam's last question. Segue, but would you ever consider a rational NFT collection as a project for the rational community? I was actually thinking of like just a meme coin. Um, because why not? I've thought about it many a times, especially with VRAM. I could have voted for it, which is not the worst idea. The point on Arbitrum. I mean, just start at like a 5 chip. I could collateralize it with 5K or whatever. And the smart contract. I transfer the LP to the contract, so the contract, and I just burn ownership in the contract. And maybe I just own it all. Maybe it's a way for the captain to express what it means to actually be rational. Whereas I monetize it with 5K and LP, and I buy like 50% of supply. I buy 2,500, so that'd be like 7,500 out of my pocket to get this thing off the ground, and I own 50% of supply, and then everyone is able to see how rational I am, and that's not the worst idea. I could give it away. I could use it as incentives and I could do interesting things with it maybe. I don't know. But the reason why the thought came to mind is what would I do with it? What could I do with it? I wouldn't sell it because that would defeat the entire purpose and that wouldn't be rational, would it? That would make no sense whatsoever. That's what the failures do. And that's not something I would do because I would do things right. It's the only way to be rational. So that could be interesting and to be a test for folks to understand and to be able to prove the captain's capacity to be rational. So that's the kind of the thought that went into it. Then I would obviously use Midjourney and various platforms to create some nice branding. And this stuff doesn't take too long. Stuff literally takes a half an hour. I just question uh, whether it could potentially have a negative impact on my brand. And it's not like my brand makes any money. I don't make any money off YouTube. I don't make any money off Twitter. I just like to talk to you guys. So I don't know. Maybe I like to uphold just from an integrity standpoint, and I don't want to potentially tarnish it in any way, shape, or form. So that's maybe why I just don't do anything. I don't know. That's a nice thought, Adam. Something like that. It has crossed my mind many a times. Yes, memes are big, memes are big. Oh, you like the idea of the memes. You like the idea of the captain, like it's like rational token, RT. I don't know, something. I'll throw it through GPT or Claude or something, and I'll come up with something creative. Maybe. Highly recommend the NFT flat 0.01270 revenue of Thana E, something like that. Oh, you like you like this idea? Maybe. I'm not doing those taxes or deflation. That's silly. Fix apply. Maybe I keep a burn function open on the contract, and I'm like, I'm gonna burn because the contract will own the LP because I'll transfer the LP deposit to the contract, and maybe I'll keep the burn function. I don't know, something creative, something interesting. Like people can voluntarily burn their own tokens to create deflation, or periodically, or so there's a function maybe in the contract where the contract would sell some LP, and I don't know. I don't know. That sounds risky. I have to think about some of these things and obviously make sure the logic is sound and the contract is well executed. But then again, if you keep it simple, you don't have to really worry about too much validation, too much review. CRT, Captain Rational Token. Okay, that makes sense. Mix. Coming in from left field with a good idea. And then, if I do it on Arbitrum and I got what I have on um, voting from a Ramsey's perspective was 1.4 million V RAM. I could always incentivize my own token. What I wanted to do with Tapioca until everything melted down. Come on, Tapioca, get your shit together. I think that's just going to be fine after a couple weeks and let them figure their shit out. Teddy, how will BTC self-sustain in the future? We will all be dead by the time they got to figure that shit out. Check back in 2100. Wrapped up and doesn't actually move on chain. Yeah, I saw. I know all these points. These are all great points. Check back in 2100. I mean, we're literally talking about shit that is going to happen after we're dead. I mean, literally everyone alive today will be dead by the time Bitcoin has to consider what happens when there's no more emissions. I don't. So this makes it irrelevant. That's an important reality to process with all these popular social media talking points. But how Bitcoin will not be able to incentivize properly without emissions and its fixed supply. I'll be dead. It doesn't matter. I am fond of tail emissions, though. So maybe it's not a recommendation to modify Bitcoin. That's such a futile type of statement. But I would rather have 21,050,000, and that 50,000 in 100 and whatever years from now, that 50,000 goes for 1,000 years. Okay, so like long tail emissions. So it's not like you're modifying, but that's a relatively new concept compared to the thoughts that went into Bitcoin's inception. So that's interesting. Fixed supply versus long tail emissions. Make it 1,000. Make it 21,000,000 1,000. The thousands, one Bitcoin per year for 1,000 years. I don't know. Maybe a Bitcoin's the most valuable substance in the known universe. It's unobtainium. Oh, one Bitcoin per year for 1,000 years. Something like that. So, but we're all dead, so it doesn't matter. We're all talking about something that's way beyond our lifespan to even consider, so it makes it irrelevant. Um, anything else? Anything else? Did volumes? Where are we with Sonic? Very curious where Sonic is going to come into the mix. Phantom was so hot in 21, and Phantom's going to be fast. So look at Solana and Phantom and high frequency trading. I think that's going to be very interesting, but that's very long term perspective. And you can't invest for it now. It'd be very speculative. It's like what protocols will do well in 8 years from now? High frequency trading, where New York Stock Exchange is offloading uh, some of their volume into tokenized form. I mean, how can you invest against that or something like that? But that's the type of things that are likely to occur in the 8 to 12 year time horizon. Like over a cycle out, you know, beyond 28, we're talking like 2032. And those are interesting thoughts. A little premature to think about them, but look at the easier to talk about those types of things, Teddy, as compared to how will Bitcoin monetize or finance security when they run out of emissions? Because that's over 100 years away. When's Bitcoin run out of emissions? When does Bitcoin run out of emissions? Yeah, 2140. It's over 100 years away. Anywho, all right. Thank you all for joining on a Monday, October 28th, 12:38 p.m. Hopefully, there were some good talking points, some good coherent arguments I offered. Hopefully, I'm able to help you a little bit be different, be rational, and that's all I could ever hope for in what I do with these type of conversations. 473 people, a very large number, made it to the end of the stream today. I appreciate each and every one of you, and together we could be a little bit more rational. So I wish you a good start of the week. I will see you again on Wednesday. We're getting close to election, so I think we're going to have some interesting things to talk about soon enough. Until then, peace.